Hey guys, in this video, we're going to talk about static delta versus dynamic delta, and we're also going to talk about synthetic stock positions. Now, we know what delta is from our options Greek series that we did, where it just measures the change of rate of your options price compared to the stock price. But there's some outside factors that contribute to your delta. Well, in static delta, there is no outside factors that contribute to it because that delta is always going to stay the same. So a static delta position would basically be a stock position, right? So we're going to be long 100 shares of Apple here at the 135. No matter what happens, Apple goes down, up, no matter how far in time we go, no matter what the volatility of Apple becomes, we are always going to have a delta of 100. And if Apple goes up by $1, we will see a profit of $100. If Apple does go down by $1, we will see a loss of $100. That's black and white. It's very simple. So static delta does not move. It stays the same. What is dynamic delta or theoretical delta? Well, it's basically all your options positions. Why is it called dynamic delta? Well, because it's delta because it still represents the rate of change. It's basically representing a number of shares, right? So if your delta is 100, it's going to trade like 100 shares. If your delta is 51, it's basically going to trade like 51 shares of that underlying. But there is outside factors that are constantly changing this delta. So this dynamic delta will always be constantly fluctuating up and down, always going to be changing because of the stock price, because of volatility, and because of time decay. Okay, so that's basically the main differences between dynamic and static. Now, some strategies can have dynamic and static both. So, like a covered call, you're going to be long 100 shares of Apple, and then you're also going to be selling an out of the money call against that. So you would have 100 shares of that static delta, but then you're also going to take that short dynamic delta against it. So some strategies have both. Again, it all depends on how you want to trade, what your assumption is in the market. Do you want to be with the market? Do you want to be against it? Do you want to roll with the volatility or not? That kind of depends on how you want to look at your deltas and kind of look at your whole portfolio in general. Now, when you hear people talk about synthetic stock positions, what does that mean? Well, it just means a position made up of dynamic delta that is acting like a fully stock position. So think about, we did a video about the zebra strategy, zero extrinsic back ratio. That gives us a delta of basically right around 100. The most popular though is going to be, let's just put one on right here, 140 calls in August. We will purchase one call there. That gives us a 51 delta. We'll go over here to the 49 delta puts and we will sell that. That gives us a delta of 100. So this would be considered right here a synthetic stock position. Why? Because we still have a delta of 100. So if we had 100 shares of Apple at 135, it would be trading the exact same as this position. So, but the difference is this position right here has volatility and time going with or against it, whereas that static delta does not. But even though they are trading the same, a price move up or down is going to fluctuate $100 in our position. This synthetic stock position with the dynamic delta, this will constantly be changing depending on volatility, time decay, and the actual stock price itself. So it's just it's very simple. It just sounds really crazy. So you can talk to somebody like, oh yeah, I got a dynamic delta position on. I'm about long this many deltas and I'm short. It doesn't mean, oh, so you got a call vertical spread. Cool. You know what I mean? So you can kind of talk it up like it sounds big and bad, but it's really very simple. Static delta just means it's delta that's not going to move, basically a stock position. Dynamic will always be constantly moving because of time, volatility, and the underlying price. That's your option positions. And then synthetic stock position is basically just those 100 deltas, 100 dynamic deltas, sorry, oh my gosh, to create a stock position or create a stock-like position because you have those 100 deltas. That's all it is. So very simple, very sweet. If you have any more questions, feel free to reach out and we will kind of go over this a little more, but that's all it is. All right, guys, thanks for watching. Make sure to check us out on social media. We have attached the links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.